Hey, welcome! If you've ever found yourself wondering how to grow your wealth in the stock market without compromising your faith, well, you are in exactly the right place. Today, we're going to cut through all that confusion and lay out a really clear, practical guide to investing the halal way.
So this is the big one, right? For so many of us, it's the central question. You absolutely want your money to work for you, but not if it means going against your beliefs. It can feel like you're trying to navigate a maze, for sure. But here's the good news. There is a clear path forward, and we're going to map it out together.
Okay, so here's our game plan. We'll kick things off with the investor's dilemma. Then, we'll pinpoint exactly which financial instruments you need to avoid. After that, we'll get into why mutual funds can be so tricky, and then find the right path with equity. And we'll wrap up with the toolkit you'll need and one super important rule you just can't forget.
All right, Section 1, the investor's dilemma. Look, it's pretty simple when you think about it. Just like anything else in life, the stock market has things that are permissible, or JAs, and things that are impermissible, JAs. And the real key here isn't just memorizing a list, it's about building the confidence to spot what's what, so you can easily steer clear of what isn't allowed.
So Section 2, forbidden financial instruments. Where do we even begin? Well, the very first step in building a solid halal portfolio is knowing what to leave on the shelf. So we're going to start by calling out the specific financial tools that scholars widely agree are impermissible. This way, you can invest with a totally clear conscience.
Okay, first on the list, futures and options. Let's break it down real simple. These are basically contracts, right? It's where two people agree to buy or sell something down the road at a price they decide on today. The key thing to get here is that you're not actually trading the thing itself. You're trading a promise about what's going to happen in the future.
So you might be asking, okay, what's the problem? Why are these off limits? Well, it really boils down to four big issues. First, there's often interest involved, what we call sued, especially when trading on margin. Second, and this is a big one, you're basically selling something you don't even own yet. Third, both the payment and the delivery are pushed off into the future, which is a type of transaction that's not allowed. And finally, let's be honest, the main goal here is usually just pure speculation. It's more like betting on price swings than actually investing in a real business.
And this isn't just about futures and options, by the way. This same logic applies to a lot of other things. Think about how commodities like gold and oil, or even some ETFs, are traded. So often, it's the same pattern. A ton of speculation, but nobody's actually taking real physical possession of anything.
All right, moving on to Section 3, the mutual fund dilemma. Now, let's talk about something super popular, mutual funds. I mean, on the surface, they look like a great idea, right? A smart way to diversify your investments. But for the halal investor, there's a pretty big catch, a paradox we really need to get into. And here's the heart of the issue. A mutual fund, the idea of it, isn't actually forbidden. I mean, think about it. If a fund only invested in 100% Sharia-compliant companies, it'd be totally fine. The problem is what happens in the real world. In practice, almost all of them mix the good with the bad, halal and haram investments all jumbled together. Why? Because their number one goal is profit, not following ethical rules. And that's what makes them unsuitable for us.
Okay, Section 4, the path of equity. So we've navigated around all the forbidden zones, we've avoided the tricky spots, so where does that leave us? Well, it leads us right to the main road, the primary path for halal investing, and that's the world of equity. And this is really the core idea we need to hold on to. Investing in stocks, which just means buying a small piece of ownership in a company, is absolutely permissible. But, and this is a huge but, there's a critical condition. The company's actual business has to be halal. You have to remember you're not just buying a stock ticker, you're becoming a partner in that business.
Okay, Section 5, your investing toolkit. So now we know what to invest in, stocks in good, halal companies, but how do you actually do it? Let's get practical. You're going to need an investing toolkit, and it all starts with 3 essential accounts.
Yep, just 3. These 3 accounts are the foundation of your whole setup. They all work together. Let's break them down.
First up, you've got your DMAT account. The easiest way to think of this is like your digital vault, your tijori. Back in the day, you'd get actual paper certificates for your shares that you'd have to lock up somewhere safe. Well, the DMAT account is the modern version of that. It keeps all your shares safe and sound, just in electronic form.
Next is the trading account. If the DMAT is your vault, think of the trading account as your agent, your vakil. It's the one who goes out into the market for you. It's the account you use to actually place your buy and sell orders, and it carries out your instructions. And finally, the third piece of the puzzle is just your regular bank account. This is what connects everything together.
It's your cash flow. Money goes from your bank to your trading account when you want to buy, and when you sell, the money comes right back into your bank account. Simple as that. It completes the whole circuit.
Okay, last section. Section 6, the T+2 Rule of Possession. We've covered what to buy and the accounts you need to do it. But now we've got the final and maybe the most important piece of the puzzle. This is an absolutely crucial rule for making sure your trades are actually compliant. You got to remember this one.
So, at the very heart of all this is a super important principle from Islamic commerce. It's simple. You cannot sell something you do not actually own. This concept is called Kabza, which means possession. Before you're allowed to sell something, you need to have full, complete, settled ownership of it. No shortcuts.
Okay, so how on earth does that work in the stock market where things move so fast? Well, this timeline for the Indian market lays it out perfectly. Let's say you buy a share today. We'll call that day T for trading day. Here's the thing. You don't own it the second you click buy. It actually takes 2 more business days, what we call T+2, for that share to officially get transferred and land in your DMAT account, your vault. It's only after those 2 days are up that you have Kabza, or true possession, and only then are you allowed to sell it.
And really, that brings us to the most important takeaway of all. This idea just sums everything up perfectly. Things like day trading, buying and selling a stock on the very same day, that completely goes against this principle of Kabza. So you have to remember, in halal investing, patience isn't just a virtue, it's a rule. It's an absolute rule. You have to wait for possession.